Why is Dogecoin crashing? This is the question that I'm going to answer in this video. What's up, YouTube community? Welcome to Invest Desk, your #1 channel for cryptocurrency investing, daily news, forecasts, and updates. My name is Syed, and in this video, I'm going to explain and we'll take a look at what is causing Dogecoin crash, and not only just Dogecoin, but the entire market is crashing. So let's check it out. First things first, I'm not a financial advisor, so I want to set the record straight. Whatever you do with cryptocurrency, you trade at your own risk. And second, those of you who are new to the channel, who do not know me, of course, I've been in the industry for a long time. I have a degree in finance and PhD. I do my own trading and I just share my knowledge and expertise. With that out of the way, let's dive right into what is causing Dogecoin to crash and overall market to crash. Here is the #1 reason. Bitcoin traders are bracing for record $6 billion in options, and that is going to expire Friday, which is tomorrow. But what does this have to do with the entire crypto world, right? Well, definitely Bitcoin is the Mac Daddy of all cryptocurrency. We know that. So, but to understand the real cause in the Bitcoin options market, we call it as a max pain, right? And that's the word we use. It's called the max pain. Now, to understand this phenomena, think of this as max pain in the options world is a situation in which the stock price simply locks in on an option strike price as it nears the expiration, which would obviously cause financial losses for the highest possible number of option traders. Now, it attempts to sort of like explain how during the last days the underlying stock prices often sort of like cluster together, right, around the strike prices or bring losses to the option buyers. But here's the summary. I'm going to try to make it easier. Think of max pain as a trading concept that simply states that the market dynamics or manipulation can cause the market price of certain securities, stocks, cryptocurrency, close to expiration to expire worthless. So basically it works under the assumption that near the expiration date of an option, buying and selling stock options lead to price movements towards the point of maximum pain, or market setters manipulate price indices to gain more from the closing stock price. Using max pain to trade stock options is, by the way, challenging since the strike price changes frequently. And that's what we're seeing here in the market. So think of this as a term, max pain, right? Is a somewhat controversial theory called maximum pain theory, which simply states that there will be a maximum loss to investors who buy and hold contracts until the expiration date. There are two assumptions, by the way, for the occurrence. The first assumption is simply pegged on price movements, which is due to the legitimate buying and selling of stock options for hedging by traders. Now, during the last days, for example, the index moves towards the strike prices, as I mentioned earlier, where the option buyer experiences the maximum loss. The second assumption simply states that the manipulation by option sellers, such as large institutions that hedge large positions of their portfolios. Since they're large-sized institutions, they can manipulate the index prices, resulting in no obligation on their part to fulfill the contracts, thus hedging their payouts to buyers. All right, alternatively, think about this. The strategy intensifies towards an expiration date, which different groups competing based on purchasing power to drive prices towards a more profitable closing price. So about 10% of stock options, for example, are exercised, 30% expire worthless, and 60% are traded out. That's about 100% in total. Maximum pain occurs when market makers reach a net positive position of call and put option at a strike price where option holders stand to lose the most money. Now, by contrast, option sellers may reap the most after selling more options than buying and causing them to expire worthless. So of course, the maximum pain theory is definitely controversial, but that's what happens. So this theory, the critics of this theory, by the way, are divided on whether the maximum pain behavior of the closed stock prices occurs by chance or is a matter of market manipulation. And that's really the discussion going on, the argument. The latter reason, market manipulation, for example, raises more profound questions about the oversight of markets. So how do we actually calculate the maximum pain, right? What is this all about? Since with Bitcoin, and we know that the Bitcoin is traders are bracing for a record $6 billion in options that are going to expire Friday, right? So calculating this maximum pain is a time consuming, of course, you have to do a lot of math to come up with the outstanding put and call dollar value for each of the strike prices. But you can do that. That's of course doable, and of course traders do it all the time. For example, you have to find the difference in strike price and stock price. You have to find the product of the, multiply the results in the open interest at the strike price, and you have to sum up the dollar value. There's of course the formula of calculating the maximum pain. Let me give you a practical example so that it makes sense, right? Assume that the company XYZ Limited, they want to trade its stock options when options of a stock are trading at a strike price of, say, $51. Now, in such a case, there is a significant open interest on the stock options at strike options between $54 and $55. Now, ultimately, the maximum pain price will settle at either of the two prices, since they will render the maximum value of the company stock's options to expire worthless. So, in a second example, to illustrate the concept further, let's consider a company X with several contracts that traded on its stock. Now, with the majority at a strike price of 50. Suppose now that during the expiration time the company's stock were trading at 50, it means that any strike price of $50 would be in the money scenario, and hence will expire worthless, right? So the idea is that any given security's maximum price at an expiration date can be predicted with reasonable accuracy to determine when to sell options for profit. Now, this concept works best under normal trading conditions. So let's get back to our Bitcoin, right? $6 billion in options are set to expire tomorrow, Friday. And that's why we call it the maximum pain in the Bitcoin options market. And like I said, this particular theory simply says that the market will gravitate towards the pain point while heading into the expiry. And that's because sellers, and these are typically, by the way, institutions, right? Not just retail investors, but typically large institutions, investors, or other sophisticated traders, large traders with a lot of capital. They often try to push the price towards the maximum pain point by buying or selling the asset on spot or futures market. This bullish spin is that if Bitcoin makes it through Friday without a major correction, then of course a major overhang will be lifted. And that is exactly what is happening right now in the market. You see Bitcoin falling, you see Ethereum going down, you see Cardano going down, everything is going. Of course, Dogecoin is also down. And you will notice that Doge was almost as down as 0.49, 0.50, or 5 cents. So there you have it. I just wanted to cover the number one reason why Dogecoin is crashing, and the entire market is also being highly volatile at this point in time. But if we cross the Friday safely, everything is going to bounce back, supposedly, hopefully, moving on over the weekend and next week. So of course, like I always say, it's always beneficial to do your homework. Make sure you run your analysis, run your numbers, and you buy low. And of course, to maintain the average cost buy. So hey, that's your decision, your call, whether now is a good time to buy. But definitely markets will revive, and that's with stock market in general over a long period of time. So make sure you like, comment, and subscribe. I appreciate your feedback. Leave a comment down below. Hit the subscribe button, smash the like button, and of course the bell notification so you get notified every single time there is a news update. And of course, my name is Syed, and I will see you in the next video.